If you're investing in a real estate syndication, you are most likely going to receive a K-1 tax form. This is something to be aware of. This allows a company to utilize pass-through taxation, which shifts the income tax liability from the entity earning the income to those who have a beneficial interest in it. And so keep in mind that there is some good and some bad in that. Because they are shifting the income tax liability, that likely means that for the good, you're going to receive some depreciation on the property. And most syndicators out there are taking advantage of bonus depreciation. That's a term for another video, but they are utilizing a lot of write-offs early on in the investment. And so they're able to see a pretty large paper loss. You're able to see a paper loss early on in the investment, which is really nice if you have other taxable gains on the passive side. For example, you're getting cash flow from the property in your pocket, whereas on paper it's showing a loss. So hopefully those losses will help offset, the taxable income from the property that you were getting, at least early on in the investment. It also could maybe negate other passive gains from other investments that you're receiving, or if you're a qualified real estate professional, you would be able to potentially take some of those losses as well. But always consult your CPA. I am not a CPA, and I don't pretend to be one. So please talk to them. Things are always changing, so you should definitely be aware it's your responsibility, when you're filing your taxes, to know what you're putting down on your taxes and what write-offs you're taking. And I would highly recommend hiring a very good CPA, especially if you're doing much real estate. They can help you so much on that front. So the K-1, again, it's going to be a very long document. And on the back end, where there might be some challenges, is you're going to pay capital gains, because hopefully there's a very large disposition where you're selling the asset, you're making a really good profit on the back end. So hopefully you're going to see a good gain, but that also means you're going to pay capital gains on the back end. So while as you might have seen some really great write-offs early on, some good paper losses, you're going to see some hopefully big paper gains on the back end. So just be aware that you are going to be paying taxes later on, even if not now. We're just deferring, we're pushing those taxes ahead. One other thing I'll mention about K-1s is ask the sponsor if they're on time with their K-1s. We've been a part of both sides of the equation. Sorry, my baby is crying in the other room. I'm going to get her in 2 seconds, but we have some of our K-1s that are late every year, so we have to file an extension, where we have others that are on time. And so it's important to know how you feel about being late. It's easy to file an extension, and we haven't had issues doing that. But if you're one that likes to live by the books and always have your taxes on time, this could be a deal breaker with some of the sponsors out there. So ask the question, are you turning in the K-1s to me on time every year so that I have enough time to file my taxes? Hope this helps.